Hello, everyone. Welcome to this webinar brought to you by Bursa Malaysia and managed by LifeChamp. Today, our webinar's topic is trend following strategies. My name is Shen Chu. I'm the moderator for this session. So welcome, everybody. So big money is made in big trends. Okay, so trend following strategies is one of the ways that traders can make money by trading and trailing a big trends. Okay, where you can achieve multi-baggers if a strong trend is established. So today we are going to look into how can we use trend following strategies in different circumstances, and where should we put our how do we see the trade setup. All right. So disclaimer, as usual, whatever we share in this webinar is only for educational purpose. In no way that we give you any recommendation for you to buy and sell any listed securities that we mentioned here. So if you decide to make any investment decisions, you're 100% responsible for all your investment risks. Okay, allow me to introduce our speaker today. And he is a position trader in the capital market, focused on stocks and also futures. He is the founder and chief master trainer of Street Finance. He has this signature program that is titled Street Trader Intensive Program, allowing individuals to trade without monitoring and speculating. It is featured in Britishpedia Biographic Encyclopedia, Successful People in Malaysia, 3rd edition. It is also featured in media such as City Plus FM, Borneo Post, Sinchu, and etc. He is often engaged by Bursa Malaysia and other investment banks to give talks in trading and investing. And he's also a frequent speaker in university and colleges. So without further ado, let us invite our speaker today, Jeen Hao.
Hello, thanks, Shen. Hi, everyone.
Hello.
So should I start sharing my screen
Please,
now?
go ahead.
Give me a moment. Okay. Share screen. All right. So is my second screen being shared right now?
Yes, can see.
Yeah. So it's a full screen one, right?
Correct.
Okay. Great. Okay. So we are good to go. Okay. So hi again, everyone. Jeen Hao here, and without further ado, let's just jump into today's topic. All right. So I have about 1 hour and 15 minutes. Am I right? Or 1 hour, 10 minutes. Okay. So the title is Trend Following Strategies, and that is very straightforward. Okay. We're going to learn trend following strategies in today's webinar. Okay. So here's the content outline. The first thing is what is trend following and how it can level up your trades. All right. And also second, how to structure your trading plan. And third, learn 2 practical trend following strategies. And later on, I'll bring up more recent examples because these slides was made like a couple of weeks ago. I believe it's like 2 weeks ago or last week. So if time allows, I'll bring out the most recent chart and maybe give you a little more recent example, but understand the disclaimer. Okay, everything is just for educational purposes only. Do your own due diligence before putting your hard-earned money into anything. So first thing, what is trend following and how it can level up your trades? Now, instead of me telling you, let me just ask you guys a few questions. And also, if you want to have a better learning experience, when I ask some questions, then you type the answer or responses inside the chat, not the Q&A, inside the chat. All right. So the first situation, do you ever encounter it? Okay. You look at the stock price has been dropping and it looks cheap. Okay. You buy the stock. However, the stock just becomes cheaper and cheaper. How many of you faced this before? Can you please type number 1? Okay. You type 1. Okay. Let number 1. Okay. Type in the chat box below. All right. So a lot of people type 1. Okay. I think the most appropriate example could be like, the gloves stocks, perhaps, okay, that many people can relate to. Okay. So the second situation, you look at a stock. If the stock price has been going up and you feel like it's very expensive and you feel like you are late for the party, you end up not buying it. However, the stock prices moves higher and higher and higher and higher, and you always feel like, yesterday or last week or last month was the best time to buy. Okay. How many of you faced this before? Type 2 in a chat box. Type 2 in a chat box. Okay. What are the stocks that you feel like this lately? Okay. Perhaps you can also type in the chat box. Okay. So now, these two questions are the questions that I always ask people whenever I introduce trend following to people. Okay. Because that would relate to one of the core beliefs of trend followings later. Now, the first thing that we got to understand is this: everything has been priced in. The basis of technical approach, which is technical analysis, is that market action discounts everything. Okay, market action discounts everything. All that is known or can be known is in the price. Let me give you an example. Okay, the hottest topic right now is whether or not the US side is going to have another negative quarter, okay, of negative GDP, okay, for the second consecutive quarter. Because if we have another negative GDP quarter reported, then we will be officially in a technical recession, okay, at least the US. But you know, whenever the US, okay, is not doing well, then we got affected as well, okay. When the US needs, the rest catches cold. Okay, so now everybody, okay, has already sort of like expect that, okay, the GDP number is not going to be great. So this has been priced into the market. Okay, and also interest rate hike. Okay, many people are talking about 0.75% of rate hike because the Fed has to raise the interest rate quite aggressively. Now, in this regard, all these things has been factored into the market. So if the interest rate is really come out to be 0.75, then the market might be neutral or a little bit of sell off and buy up, things like that. But if suddenly the rate hike becomes 1%, for example, then the market will react in a more extreme manner. And so these are the things that technical analysis has already think that, okay, at least from the technical analysis perspective, all these things, all that is known or can be known is already being priced in. Now, second, technical analysis assumes that all the news and known facts or information, including but not limited to the expectations of different market players, have been priced in. This is what I mentioned just now, including for the entire market or stocks. Just like when last time, 2 years ago, when glove companies, they keep reporting higher and higher and higher earnings, but the share price just started to drop and then drop lower, lower and lower. Why? Because people already expect it to be a certain level and it has already been priced in. So if it performs less than the expectation, despite that is still being a great result, the share price might react in another way. So therefore, technical analysis is not concerned with the underlying value of a security. Okay, we don't care about the value, but of course, if you're an investor, then the things is another way around. But at least for technical analysis, it's not being, it's not a concern. Okay, because we all know that great company can be undervalued and the share price can be like cheap as well. And also lousy company, okay, when a lot of people put a lot of hope, hypes or whatever thing into the company, the share price can also go up for no reason. All right, so there are many schools of technical analysis, but they are all done through evaluating the historical price and or volume data. Now, trend following is one of the technical analysis. Okay, one of the technical analysis. So the trend, this is the core belief of trend following, and this relates to the two questions that I asked you just now. First, the trend is more likely to continue than to reverse. Okay, so that's the reason why trend, most of the time, they can keep going higher, 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 and higher. Right? So an uptrend has a higher probability to go up and a downtrend has a higher probability to go down. The only thing is, in a bull market, the probability of it continuing a trend longer and longer and longer is higher. Now, in the current market right now, it's quite tough in a way that because the sentiment is not good. So a lot of uptrend seems like very short life. But again, short life uptrend is still an uptrend. You still can make money from it. Okay. I believe if you are in the market, you know that certain stocks in Bursa Malaysia, they are really performing, or they were really performing for the past couple of months. Right. So trend traders or trend followers will look into going long in an uptrend and looking to going short in a downtrend. But of course, I'm talking about trend following. I'm not talking about anything about intraday. So in Bursa Malaysia, equity, we can only go long. And even in other markets, I also only go long because it's a stock. Okay, it's a stock. So, and it's easier to ride big trends when it is up rather than going down. It is like a lot of people are trying to short the US market right now. Even if they're short like a couple of months ago, if you really go and short it, the profit is not as amazing as you go and find an uptrend stocks and ride the trend, right? Short selling, it just looks, it intrigues a lot of people because, you know, when things drop, prices drop, okay, it makes people feel like there's extra excitement, extra into it, and we just associate a lot of like fasting happen in the downside. So that's the nature that we have. But when you are really shorting the market, you know that things are not easy. Okay, those who have traded the put warrants in our market before, then you know that it is not as easy sometimes compared to you buying into an uptrend stocks and their call warrants. Okay, how many of you can relate to this? Maybe you type me, M-E, in the chat box, because I don't know how many of you really feel so. Because some people would still think that, okay, betting or going on the short side can make you more money. But when you really go and deal with all the shorts or put warrants and call warrants, you will realize that the money in an uptrend is way easier, right? So trend followers determine the position size at the entry based on the initial risk. So changes in price will lead to gradual increase or reduction of position size. Now, for example, long only stock trader, which is me, okay, trend follower, will add more position as price goes up and reduce or exit position as price goes down. But of course, we add positions with proper calculation as well. All right, so we don't add like too much as well. We increase, but in moderation. Now, if you want to read more about trend following, I'm not sure if you can see my screen. At the back there, underneath the banana, okay, the first book is actually Trend Following. It's by Michael Koval. So if you want to read more about trend following, you can go and grab that book and you will really learn a lot when it comes to the mentality side and the logic side, not the strategy. Okay, the mentality side, the logical side of this strategy, okay, and how those legendary hedge fund managers, they use this strategy to profit a lot in many markets. You can use it in stocks, you can use it in futures and whatever thing. Just that you need to tweak the entry, exit, and things like that. But the concepts is basically the same. Now, let's talk about, nothing is perfect, basically. Let's talk about the pros and cons of trend following. First, we ignore short-term market noise. Okay, we ignore short-term market noise because just like we want to ride big trends. So if it is in an up, the stock is in an uptrend, today it drops like 0.5%, 0.3%, or it goes up like 1%, doesn't matter to us. What we want is the entire trend. Okay, we want more up than down. Well, because we cannot expect a trend to go up in a straight line, like every day go up 2-3%, 2-3%, 5%, 1%, 3%. We cannot expect that type of trend. Yes, it does happen, but once in a blue moon. But if you're really in those stocks, I believe you will quickly realize there's another problem. All right. So, second, monitoring is optional, and we don't need speculation. Speculation is not involved. So third, low trading frequencies, meaning that we don't buy and sell like every other day. Okay. Over the long run, we pay less commission, less brokerage fee. I think that's a great thing, despite the fact that brokerage fee has been going lower and lower and lower compared to the old days. But paying less commission over the long run is still a great thing. The fourth one is higher average gain. You have better risk reward ratio over the long run as well. Okay, now here are the cons. Now the win rate can suffer sometimes, especially during a choppy market. Now, choppy market means sometimes the market goes up, have a fake breakout, and then it quickly retrace down again, then maybe break previous low a bit, then go up again. It's like a very volatile and no directions market. Then it can be a little bit tough to trade with trend. But again, during that kind of market situation, I believe most of the strategies out there, as long as you are trading, you will get burned a little bit here and there as well. So being able to protect your capital is still vital. Now, second, it is challenging to ride big trends, especially from the emotion aspect. Okay, especially from the emotion aspect. I'm not going to show you like all examples, but I believe this alone, when I mention it, is challenging to write big trends. A lot of you might know it is not easy to buy, okay, let's say Hatha Lega back in the days at maybe 6 ringgit, 7 ringgit, and hold all the way up to like 15, 18, 20 ringgit. Okay, so this is a challenge because along the way, we are dealing with a lot of emotions within ourselves. Okay, so these are the introduction of trend following. Right now, I'm going to show you how you can structure your trading plan with the TEST process. Okay, the TEST process. The first one, the T is trend. Okay, the T is trend. Second is entry. Third is stop loss. Okay, so if your stock hit a stop loss, that's where you're going to stop. Okay, so when we find a stock, first thing we look at the trend, whether that stock is okay, when it comes to the trend, as far as the trend is concerned. Okay, second, once we have a trend, we're going to plot entries. The entries might not be right now. It might be next week. It might be the next day, or it might be right off the bat. Okay, but just understand that not all the time we want to enter straight away. We want to enter only when it makes sense. Third, stop loss. Now, if you want to have a general guideline, I myself, when I trade, okay, the maximum stop loss I allow is 10%. In other words, because I set this rule, I don't really trade penny stocks. Okay, I don't really trade penny stocks. All right. So if the stop loss is hit, then that's where this process is going to stop. Now, if the stop loss is not hit and go up, that's where you're going to decide whether or not you want to take some profits or you want to do one thing called trailing stop. And the essence of trend following is the big trend. The big trend that you're going to ride. And to ride a big trend, you need to know, okay, how you can set trailing stop. And I want to give you an example. Okay, I just draw on the screen and explain. Okay, now, if you were to buy a stock, okay, at $2, okay, and then when it goes all the way up to 4, then it's 100% gain. Now, this one is straightforward. The trend can still continue. Okay, now another person, if he bought, okay, these two stocks, exactly same stock, okay, he bought at 4. The stock go up. Both persons can make money. But every 40 cents movement, okay, represents 10% gain for the second fella to make, every 40 cents represent 10% for the second fellow who entered the stock at $4. However, every 40 cents movement represents 20%, okay, for the first person. So as trends goes up, okay, as trend goes up, those who know how to do trailing stop will make more money just simply because you exit the market late for good, because you let profit run. And also, when the stock is at two bucks, to move 40 cents, it's a lot, okay? Compared to when the stock is 4 bucks, 6 bucks. You want the stocks to move like 40 cents, it could be done or happens in just like maybe 2 days. Okay, so if you hold a big trend before, then you will know that when things goes up, things can be very volatile. For example, if you enter Top Glove at 6 bucks, 7 bucks, okay, if you want the stock to move like 1 ringgit, that's going to take like 1 whole week perhaps, or maybe 3 days at least. But when Top Glove is all the way up at 15 ringgit, 20 ringgit, 1 day the movement can be like 1 ringgit, 2 ringgit. So for people who entered way earlier, you also need to know how to manage the position, because that's going to be very wild. Okay, just to let you know that in terms of profitability, if you can master trailing stop, or you use trailing stop to help your trades, sometimes you can take home more profits, just simply because as the trend progresses, okay, the percentage wise will mean a lot to you. Okay, so let's just use this as an example, although it's an old example. This just to demonstrate the 4-step process. The first step, make sure it's uptrend. So this was MPI. So you can see that it was in an uptrend. Okay, it was in an uptrend. So how can you know it's an uptrend? You can use whatever strategies. Higher high, higher lows. You can use like EMA 28, 40, 50, 100, 200. I believe whatever technical analysis you try to use, okay, EMAs, MAs, or like just higher high, higher lows, the result is going to be the same. This stock is in an uptrend. Okay, if you're still with me, type up. Okay, because a lot of people would like to say, okay, you would like to ask, like, how do you know it's an uptrend? Which EMA do you use? Do you use MA or EMA? Do you use 20 or 25? Do you use 25 or 30? I think a lot of time, people are obsessed with details that doesn't really matter much. Okay, so whatever EMAs you're using, or whatever ways you're using, you want to use like Ichimoku also can. Okay, it's going to tell you that this is in an uptrend. Okay, if you look at this stock, okay, you apply the technical analysis that you know, and you think that it's a downtrend, something wrong. Okay, so it's not hard to identify trend, right? So this is definitely uptrend. Now, second, plot entries. So the way of plotting entry can be different. Now, the example that I'm going to give you here is based on the rebound, and this is a typical entry that I like. First, uptrend doesn't go up in a straight line. It will go up, come down, go up, come down, go up, retrace, go up, retrace, go up, retrace. Now, what I like to do is when it retraces, I wait it to turn around. I don't buy when a stock is dropping, because I don't know whether or not it will continue drop. Okay, so I will wait until it drops and start turning up. So I buy only when the stock turn up, and then I will have a swing law, which is a previous law, as a guideline for me to set my stop loss. So in this case, this is a rebound. So I enter when the stock turn around. So why I enter when a stock turn around is because that's a sign of trend continuation. Okay, that's a sign of trend continuation. It's like, imagine, okay, you are running, like you ask an athlete to run like maybe 50 kilometers. Okay, now the runner might not be keeping at the same pace. Maybe go a little bit fast, then slow down a little bit for a few breaths, then continue. Now, how can we know that if this person can finish the 50 kilometers? So when the runner can run at a like steady pace and then suddenly it rests a little bit, then he can continue. Okay, then that's a great sign. Something like that. All right. So that is how you can plot an entry. So remember the key: trend continuation pattern. It can be a rebound, it can be a breakout. All right. So next, we'll set a stop loss. So again, like what I said just now, I have a reference to set a stop loss based on previous swing low. Okay, previous swing low. So from here, what we can do is use this previous swing low as a reference, and then we set a stop loss down there. And then my personal preference is the stop loss ideally is less than 10%. Less than 10%. All right. So the reason is very, very simple. If I lose 10%, I need 11% to cover. If I put my stop loss at 20%, okay, if I cut loss at 20%, then I need to find another trade that go up by 25% before I break even. So 25% gain is not to say that they are impossible. There's definitely possible, but when the market is rough like this, you might find some difficulties, okay, earning 25% in a single stock, right? So 10% or 8 to 10% to me is a good spot, all right? So for big caps like this stock, MPI, okay, 8%, somewhere around 8% is going to be fine, okay? So next, you can see that the stock basically went up. So what we do is every time, okay, I entered here, every time it went up, okay, so I entered here and then it retraced, then go up again. So what we do is every retracement and rebound, we move our stop loss higher to become a trailing stop. And then it went all the way up, retrace down and go up. So what we do is we move our trailing stop higher. Okay. And then eventually, if you back test this stock, you will know that, okay, you will know that the trailing stop is being hit. The only thing is we don't like take profit because normal people, let's say when they buy at like 24 ringgit, when the stock go all the way up to 30, 32, they might get a little bit scared. So what we do is we move our trailing stop. Okay, nowadays there are a lot of brokers that allow you to trade to set a stop order for stop loss. Okay, so it's a lot easier right now. All right, it's a lot easier right now. So again, this is an example on how we can use trailing stop to help us. But just imagine somebody were to enter way earlier. Then this guy can also use trailing stop, okay, from here, move to here, move to somewhere here, move to 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 here, okay, just to move everything up, to lock in your profit, okay, to lock in your profit. Now, example of stop loss, okay, let's say you enter here, you anticipate a rebound, that immediately fell, okay, so entry, then stop loss. This is exactly how a stop loss can be triggered as well. All right, so to be fair, nothing is guaranteed. As for education purpose, I show you under what circumstances it is possible to get stop loss because not all the time things are going to be accurate. Okay, so next, this is another indicator that I think is very useful. Okay, it's very useful to set trailing stop. Now, how many of you traded this? You have traded this stock before? Can you type yes in the chat box? YES, yes. How many of you traded this stock before? This is Pekka. Nobody. Okay. Now, when you look at these stocks are the typical stocks that let you feel last week or last month is the best time to buy. Okay, this is a typical one. All right, so this indicator is called Super Trend. So you go into Trading View, which is a free charting tool, charting software, and then you just key in Super Trend. You can find one. Okay, there are a few variations, but more or less they are the same. All right, so The super trend, basically when it is green, you can treat this line as a trailing stop. Okay, you can treat this line as a partial stop. And when it turns red, you sell it. Okay, when it turns red, you sell it. This is also another simple, quick, and dirty way of using trailing stop. All right. So next, this is MGRC. So you can also see that. Okay, previously shoot up, then go sideways a little bit. So here maybe you wouldn't enter based on. I usually don't enter based on trailing stop. I will still refer to the wave, okay, and maybe perhaps enter somewhere when it's turning up. And then I will use this super trend as a guideline for trailing stop. Because to be honest, when the stock is trending like this, all the way up, the previous swing low can be here, but the stock is already like super high flying. Okay, so you might not have a good reference like previous low was here. You might not have a logical reference to set trailing stop. In this case, use super trend. All right, use super trend. So far, how many of you have gotten some information so far? Can you please type 3 in the chat box. Type 3 in the chat box. All right, so there are a lot more. There are a lot more ways of identifying, trends and things along those lines. Okay, I believe a lot of you are very familiar with trailing stop. Okay, very familiar with trading stop. Moving average. So just to let you know that moving average can also be used as trailing stop. Okay, moving average can also be used as trailing stop. Let me just give you an example. I believe this stock a lot of people know. Okay, when TechCam is going all the way up, some people trade, a little bit here and there. So when it goes all the way up, then boom, it drops below this 20 days average. You can sell half. When it drops lower, break this low already. Okay, you can put multiple levels. Okay, so first level, when it breaks like 20 days average, you sell. Second level might be this, which is the previous swing low as an example. When it breaks this, close below, you sell. So if you sell, then it protects you from additional 14% fall. This is also another way. So never get overly obsessed with technical indicators. Okay, you need to know how to use it at your advantage. So this is another way that you can use trailing stop. You can use moving average. Sorry, because the mud rampant outside is bothering me a little bit. Okay, so this is another way that you can use moving average, because a lot of people use moving average as this and that. Okay, find trends or find entry. But I think using moving average as a trailing stop is a little bit underrated as well. So this is also another way. All right. So again, to find super trend in trading view, you can just type in super trend. Yeah, 20, 50, 200. Okay, you can use any now. Okay, 30, 100, 200 also can. Okay, it doesn't matter. All right. So again, super trend, moving averages, they are all great. Okay, just to learn how to use it. All right. So next up, let's look into trend following strategies. Okay, trend following strategies. So here we are talking about strategies. So again, strategy number 1, let's look at this one, TEST. Okay, I'm just going to repeat this for the entire night. Okay, all right. So wait. Okay. First, T, reference MA or EMA is above a slower, okay, MA or EMA. So what does it mean? Reference EMA means what's the EMA or MA that you're going to use as an entry or exit. Okay, so to be honest, 20 is a good one. Okay, I think 20 is a good one. Okay, I believe a lot of people is using 20 as well. Okay, so then you need a slower moving average that represents your midterm, something like that. It can be like 40, it can be like 50, it can be like 60, doesn't matter. As long as you have a reference. Okay, now second, your MA or EMA crossover you can buy, or at the support, meaning that it hits that EMA or MA as a support, and then it pull back and hit lah, and then the next day it rebound or no gap down, something like that. Okay, when the price close above the MA after a pullback, enter during the next day if there's no gap down. Okay, so meaning that it rebound and close above your reference MA, you can buy. Okay, later I'll show you an example. Now, stop loss 10% from entry or below previous swing low. All right, so your trailing stop will be when the price close below the reference moving average, then you exit during the next day. I'll just give you this example, then it will be very clear. So this is the yellow, the orange line is your 20 days average. The reference MA, that's the reference EMA. Now, when it retrace down and go up, close above, that's where you can buy. That's your reference MA, because it retraced, it pierced below the reference MA and close back up. You can buy here or here. All right. So when you buy here or here, that will be like 70 cents, somewhere around 70 cents. Then you put a stop loss below the swing low, that will be like probably 65 cents. All right, 70 over cents to 65 cents, about 10%, because this is a little bit penny stocks to me. So buy here, set a stop loss down here and go all the way up. And here is a typical rebound. Here is a typical rebound. All right. So again, retrace, rebound, you can buy. This is just a simple one. Retrace, rebound, you can buy. And just to show you, okay, just to show you, this stock right now, because I prepared this slide, I think about a week ago. So you can see right now, P-Trans trend higher. Today, drop a little bit, it's fine. What we want to know is the overall trend, but it might soften a bit because some people might say, okay, oh, it's a, MACD that cross or whatever thing. But you can see last time, MACD that crossed, okay? The stock after that, after retracement, still continue to go up. MACD that crossed, but trend did not die. So it's a good thing. It's a good thing. All right. So again, a lot of people say MACD that cross, you should sell already. I don't think so. Okay. The trend is still there, then it's fine. To me, the trend is still there, then it's fine. All right. So next, okay, this one, let's look at Bonia. There are a couple of ways to enter this stock as well. Okay. You can buy based on the rebound. Okay. It retrace, go up, rebound, retrace, go up. This one is pierce below, then close above. Okay. This one pierce below, close above, but after that, you will hit your sort of like your first trailing stop at this EMA 20, right? But there are multiple ways of buying. So again, when there's low volume like this, end of last year, low volume, then you cannot do anything. Okay, the stock just suddenly spike. I wouldn't chase as well, but I will put this stock in a watch list. So it retrace, go up, retrace, okay, it enters into a sort of like a midterm correction. It went all the way down, hit this midterm support at 50 days, then it retraced back up. It rebound back up and close above. Okay, EMA 20, you set a stop loss down there, then you can start riding the trend. All right. So there are a lot of ways to execute this, right? To execute this. So again, this one can be a little bit extreme, but again, no doubt this is a great stocks that has also went up recently. Okay, quite steady one. So here it went down, and then after that closed back up. Went down, closed back up. Prior to that, it is already uptrend. After that, it goes up, went back down, goes up and then it close above, then ding ding dong dong, ding ding dong dong. Here you might be in a position and say, hey, why this stock never move, never move? But again, follow your rule. When you buy here, you set your stop loss down here. Okay. When you buy here, you set your stop loss down here. So if it does not hit, then you continue on holding the stock. Then you go up, go up, go up. So you can also see that power route at a point, it was somewhere around 181. Okay. Right now, it is not as high as where it was, but the trend is still there. Right? The trend is still there. It did not break new low. Okay. It did not break new low. All right. So let's talk about strategy number 2. Okay. Strategy number 2. The first is ensure the stock is in an uptrend, ideally like all-time high or 52 weeks high. Right? Enter after the stock rebound from a previous resistance, a strong resistance that has been tested for twice or even more. All right. Which now turn into a spot. Okay. It's like breakout from a strong resistance, then come back down to retest that level. And then sort of like we anticipate it to go up, something like that. Okay. Now you enter when it breaks, it rebound from that line, which is a resistance turn support. And then stop loss, it can be 10% from entry or below the support. Now, for trailing stop, you can use like your short-term moving average or super trend, or when the price breaks below the previous swing low. So this is a very recent stocks that a lot of traders, a lot of us are really eyeing it. Okay, this stock has gone higher as well. So you can see that previously it took this level as a resistance, and then it go up, break the resistance, and then retest this level. And this level is also very congruent with the short-term moving average support, which is the trend 20 days. Okay, so it's very congruent as well. So again, when you have two at the same around the price of this level, you have two support. One is the previous resistance turn support. Another one is the dynamic support, which is the moving average. Then this is a really strong support that you can trade if it rebounds. Okay, so what you can do is you buy when it turns up. You set a stop loss down here. Right, so you might be entering at somewhere around 136, 135, 137, 138, and then your stop loss is down here below 130 or even below like 125. Right, and this stock has also shoot up. All right, so let me just find it. Okay. Right now, Malaysia stock is the choices are very limited. Okay, so you can see that it gone up, retrace down, then recently very challenging. Okay, so if this is the scenario, okay, shoot up, then quickly retrace down. If you are scared, okay, if you are scared, so people, we have to deal with emotion. So if you are scared, what you can do is you can trim a little bit of your positions. Okay, you can trim a little bit of your position. So remember, there's one thing that I mentioned just now. Let me just cycle through my slide. Okay, we will add more positions as price goes up, reduce or exit the position as the price goes down. So in order to control the emotion part of us trading, if you face something that like the stock I mentioned, which is Hanlon, okay, you can reduce, especially during extreme condition. You reduce, but I will usually still follow the rules that I have set. I usually still follow the rules that I have set. Okay. Now you reduce might be because it's a big drop, and then maybe the MACD is not convincing enough and things like that. But again, whatever strategy you can improvise the strategy as, of course. Okay, this is just give you an guideline, an example. Now let me give you another example, which is MBank. Now I know this is a rather boring stock. Okay, rather boring stock, but here's the thing. Okay, this is resistant, and then breakout, turn support. So you have multiple times to accumulate. Okay, you have multiple times to accumulate. Now, of course, if you are in the banking stocks, we cannot expect these stocks to go up like very crazily. Okay, but again, at least the trend, okay, at least the trend is slowly trending up and it is supporting at the above the EMA 20. So it's a good thing. Okay, so it's a good thing. All right, so now let's perhaps cycle a little bit to some of the current market things that I will find interesting. Okay, things that I'll find interesting. So, okay, again, disclaimer applies. All right, so just for educational purpose. Now, this one. So, understand that when a stock go up, okay, understand when a stock go up, it needs a certain period of time to have, you know, correct itself before the next rally. This type is healthy. This is in my opinion is healthy. Then it retraced and now it turn up again. Okay, now it turn up again. So now turn up, what I would do is I will slowly buy a little bit. So now it breaks out, okay, retrace, go up, buy a little bit. And also this one is kissing the zero, the bullish line, okay, of the MACD. So again, this is kind of like a good sign, So you can buy a little bit first, right? You can buy a little bit first. So let's just go and search for, okay. Do I have it here? Yeah, okay, I have it here. Okay, so again, the second thing that can sort of like give me a little bit idea is the super trend has already turned green. Okay, so it sort of like give me one extra congruency. Okay, one extra congruency. So this rebound, I entered a little bit. If it go one wave higher, I buy a little bit more. All right, so this is the kind of strategy that we use. Okay, this is a kind of strategy that we use. Let's just turn this off because sometimes when too much indicators, it becomes very messy. Okay, now some people will also look at stocks like Hanlon is the one that I already gave you as an example. So it retraced. Now, if it rebound from here, here it is, where it is right now is also great because it's the continuation of trend. Okay, it's a continuation of trend as well. All right. So, okay. So, and so this one is also another example. Okay, when it takes some hit already, okay, and then turn up. Okay. Now, when a stock is above EMA 200, you can technically say that they are in an uptrend. Okay, they are still technically in an uptrend. The only thing is, this one is not yet crossed, meaning that your 20 and 50, the 50 or 60 is still above your 20 or 30. So in this regard, the midterm wise, it is still weak. But if it continues to turn up, okay, maybe Maybank can go up like a little bit, then retrace, okay, to this line, and then boom, go out again. Eventually, that two lines will cross. Okay, eventually that two lines will cross, and you can kind of like get some other entries as well. Okay, things will progress. All right, things will progress. Now, let's just look at some of the other tech stocks that recently, okay, recover. Now, this is what I call is not an uptrend yet, because the long-term trend is still up there. The long-term trend is still not yet formed. The only thing is reason prices has been going up and the stock stopped breaking new low. So this kind of stock is a little bit riskier, okay, for trend followers. So usually we want the stock to be at least above this line. Okay, at least above this line. All right, so let's look at some of the, this one is like stock screening criteria. All right, so this one recently very interesting. So we can also see that it has already started a midterm trend. Okay, it has already started a midterm trend and it should all the way up. So if it can go up, come down and go up again, then I would say this stock is definitely an official candidate of me. Okay, it's definitely going to be an official candidate. So right now it is picking up the pace. So we don't know just yet because it might face this level and boom, go down. And then we need to see what happens the next. Okay, MACD is above zero, is crossing, things like that. It's definitely good, but we want even more confirmation. Now, learning trend following right now is a bit tricky. You need to go back to the past. You need to go back to the past and see how it can work for you. Okay, how it can work for you. So again, you can see that in the past, if you follow during a bull run, you can really make a lot of profit. Okay, you can, in the past, in a bull run, you can really make a lot. So just use this as an example. Okay, when it breaks EMA 20, 300%. You don't have to ride the entire trend. You can sell off a little bit in the middle and then buy back with smaller positions. But the thing I want to share with you is, if an uptrend can go up 300%, you can just take home 30%, 50%. And also, just look at Glove previously. Okay, one entire uptrend. Okay, from don't say beginning of trend, maybe somewhere around here, until it starts become choppy, 200%. Okay, the thing is, trend following right now can be a tricky, strategy to use, because you really need to find those super trending stocks in order for you to make some great profit, okay, from the market. But what I want to share with you is, if market is going to rally, then this strategy is going to perform at its best. Okay, it's going to perform at its best. All right. So right now, let another one. Okay, strong trend is the one that you need to watch. The only thing is how you're going to enter later. Okay, you're going to be careful, because some people might ask, because this one is the top question I get asked these few days. Chin him. Okay, is it an uptrend? Can you all type? Is it an uptrend? Yes or no? Is this an uptrend? Okay, definitely it's an uptrend. But the problem associated with this is, you see, if you were to buy now, here, your ideal stop loss can be like here, because only if the stock break like this, then it's a downtrend. Okay, then it's a downtrend. Now you might say, okay, then I buy at 460 lah. It's okay, I buy at 460, then I set a 10% stop loss. Okay, fine. You set a 10% stop loss, then the stock go up, come down, boom, hit your stop loss, then go up again. Then you were like looking at the chart after your stop loss is being hit. Then you're talking to yourself like, hey, it's still uptrend what? Then why I sell? Okay, then why I sell? Because if it were to hit your stop loss, retrace back here, then go up, it is still technically an uptrend. So why I don't like to enter these kind of stocks right now is, I want to see how it will go down first. If it go down like this, boom, 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 then go up, then I enter only when it goes up, then I have a better reference point. Okay, I have a better reference point for me to set my stop loss. Okay, for me to set my stop loss. So those are the things that you need to know when executing trades in this kind of tricky market. But one thing that you need to bear in mind is this: uptrending stocks that tend to go, they have a higher probability to go higher. Okay, they have a higher probability to go higher. So don't mess with downtrending stocks. Okay, don't mess with downtrending stocks. Focus on uptrending stocks. Okay, stocks that are going up in a good manner. Okay, so I think is Shane over there?
Yes, I'm here.
Yeah, I think I will pass the time back to you and I'll take some Q&A. We have a lot
Yeah.
more time. Yeah.
Yes, if you have any questions to ask our speaker Jin Hao, you may write them at the Q&A box. Yeah. I think there's one question to ask you. What are those three lines? Yeah.
Okay, so you can use any lines. Mine is 20, 50, and also 200 for reference, but things can change because sometimes some stocks don't take 20 days as a reference. Some they take 30. Okay, but the important thing is you need one line as a representation of short term, one line as medium term, and one line as a long term. I think long term, a lot of people use 200 days. Okay, a lot of people use 200 days. So that is a very straightforward. All right. So you can use any.
Okay. Then we have Farish who want to ask, what is the indicators at the bottom of the chart?
That one is MACD, just a standard MACD.
Okay, standard parameters.
How come the MACD nothing here in my chart?
Okay. Eng Guan would like to ask, is average up or average down a good practice?
Okay. If I'm trading, I don't average down. Okay, if I'm trading, I don't average down because if one thing is already going down, it means that it is not going according to the trend that I want. So I don't average down. Now, when I say average up, you need to go by with certain rules. So what's the rules? Let's say, for example, you buy this stock somewhere around here. And it go up, come down, and go up. Right at this point, maybe you want to buy some more. You're going to make sure, given how much you buy during the previous wave or during your previous position, how much you buy here, and how much you're going to take as a new position. Okay, you're going to consider these two, and you're going to calculate your new cost price. You're going to calculate your new cost price, and you're going to know where's your trailing stop. So your trailing stop could be this level, following this line. Okay. The question is, if given you have a new cost price already, if it goes down and hit your trailing stop, do you end up with loss or do you end up with profit? Of course, we don't want to end up in loss. So I think the logic is pretty simple. When you top up, okay, you add positions, you want to make sure if your trailing stop is being hit, you wouldn't end up with loss. Okay, you wouldn't end up with loss. So I think I answered both sides. First, I don't average down. Okay, so I average up. I don't like the term average up. I usually say top up or add position. And the rule of adding positions is if your trailing stop is not being hit, if your trailing stop is being hit, then you wouldn't end up with loss. All right. Okay. That's the answer.
So how do we determine the average up entry? This question is by Ang.
Okay. Very simple. Average up entry is same as normal entry. Okay. It's same as normal entry. So some people, if you buy here, when are you going to top up? Maybe when it rebound, you top up here or you top up here. Based on new entry, you just look at the chart. Is it the right time to enter? Again, back to the keywords just now. Do you see a trend continuation pattern? If you see a trend continuation pattern based on whatever strategies that you are practicing, then you can enter. Again, the key is trend continuation pattern. All right.
All right.
Okay.
Is there any convenience screener that we can
Okay.
use to screen stocks?
The answer is yes. Okay, but they are not free, especially in Malaysia. Okay, so unfortunately, from technical indicators, okay, if you want to screen with technical indicators, those that I'm practicing, there are no free ways. Okay, but one thing that is my practice to find stocks to trade is to look at the top gainers. Okay, is to look at the top gainers. So why top gainers is important is because every day, okay, every day, if you see certain stock come out in top gainers, okay, if the stock come out in top gainers for 3 or 4 days, 3 days or 2 days in a week, then you have to look at that stock, because that stock is probably having some kind of momentum. It's like if you have been watching top gainer for the past few days, you will realize that UWC is coming back up. Okay. UWC is coming back up. If you have been watching the top gainer, this is what you will see. But of course, Nestle, today top gainer, tomorrow top loser lah. The one, nothing lah. Okay, but let's say today top gainer, we see Hong Leong Bank. Okay. Then you look at it, Hong Leong Bank. Is it what we want? Okay. Maybe for some people, you would like to watch. If it retrace and go up, you want to buy a little bit. Okay. What happened? What comes out in top gainer today? MPI. This one I explained already just now. Okay. And what comes out in top gainer today? Aeon Credit. Hey, this one might be interesting. Okay. So you want to look from there. Okay. You want to look from there. And what else come out in top gainer today? Okay. I see Franken. Okay. It has been down, this stock. Okay. Recently come back up. Not an uptrend, but I would say definitely worth taking a look. All right. So watch your top gainer, and then you will find a lot of trading ideas. Okay. I don't know what strategies you are practicing, but I have been telling people that watch your top gainer. Right. If you see a stock come out like 2 out of 5 days or 3 out of 5 days, then take a look at the stock. All right. By gainers, I don't mean the one with percent, because if you look at the one in percent, to me, it is a little bit pointless. Why? Because you're going to see a lot of penny stocks. Okay. 1 cent gone up by 1 cent, then you see 100% gain. To me, that one is pointless. Or you will see a lot of warrants. So I go with the one in dollar term, in RM term, all right? Not the one with percentage. If you look at the one in percentage, what do we have to bet today? Pasuk KGB, half cent to 1 cent, 100% gain. I don't think that's a useful information anyway. So not the one in percentage. All right.
All right. Philip asked this question. Choppy market, however, remain dominant approximately 85% of the time, and only 15% of the time the market trend is strong. So how many markets are optimum to trade?
Okay, the thing is, you never know how the market is going to perform later. You never know how the market is going to perform later. That is the fact. Okay, so the only thing is we wait until the trend established, then we go in. Okay, we go in slowly. We wait until the trend established, then we go in. We never know when the recession or when the market is going to recover. Although we can fact find something, or we can look at technical and say that, things are how to say, things are not good right now. Okay, but you never know when it's going to come back up. Okay, and also in a so-called choppy market, there are also opportunities. The only thing is, of course, automatically, like right now in Malaysia market, when you try to find uptrend stocks in Malaysia market right now, you'll find less. In 2020, it's like everything is in an uptrend. Okay, so opportunities might be less. So when opportunity is less, like where we are right now, we trade less. Okay, when opportunity is more, there are more opportunities in the market, then we trade more. we go accordingly. So right now, Malaysia market is not that glorious. So we trade a lot less. Okay, we don't want to trade for the sake of trading as well. Right? So we cannot control the market, okay, but we can control how we react to the market. And 85% of the time is choppy, 15% is straight. I kind of agree and don't agree at the same time. Okay, because sometimes when the media reports that 85% of the time is not doing well, okay, or choppy, there are actually some stocks or sector that is performing very well. It is just like, okay, maybe outside Malaysia market a little bit, we all know that the entire world is not doing well. But for the first half of 2022, there are actually certain sectors that were doing well in the first half of 2022. And it is not being reflected in any indexes per se. Okay, so you got to know how to find them. You're going to know how to find them, and you need to know how to watch them. So in Malaysia, watch the top gainer. Okay. So this is one of the stocks that make a lot of people profit during the first half of 2022, because energy stocks, okay, are very trending during that time. Okay. And also if you trade other markets, you can also see the same pattern because of, war, oil price going up. So these stocks are like under the spotlight, right? So, but again, during that time, whatever index you're looking at, they are going down. Okay. So opportunities lie in the market everywhere. Just that sometimes we have more opportunity, sometimes we have less opportunity. But create your own trading rule or screening rule, and then make sure you back test yourself, and then just follow it. All right.
All right. The next question is by Ang. So do we enter and exit at the closing price, or is intraday at lower time frame?
Now, usually what I do is this. If it breaks my rule today, tomorrow I will sell. Or tomorrow, if it fits my rule today, tomorrow I will buy. Okay. Because I don't monitor the market. Okay? I don't really monitor the market. Or I set an alert. So let me give you an example. What do I mean by set an alert? Okay, let's say, for example, if you want to buy this stock, but because the retracement is a bit too big, so I want to buy only when it retrace, it go up to above like 150. So what I can do is you can use whatever apps like KLIC Screener. You put an alert at 150 or 151. If it hit, your phone will get a notification, and then you go in and buy. That's one way. Another way is you look at the closing. Okay, you look at closing, like for example here. Okay, the closing was here. So that time I tell myself, if it goes up tomorrow, I buy, because it's a continuation, like a bullish one. All right. So this is the way you can do it. Now for stop loss, you sell when your stop loss is hit. So let's say for example, your stop loss is here, 136, for example, because break previous law and break EMA 20. You set 136 a hard stop in with your broker. Okay, with stop function, stop limit. Okay, so that you don't have emotion when it comes to trading.
Right? Okay, thank you. Thank you, Jeen Hao. So the next question is by Faris Putra. Do you stick to one time frame in case the prices are changed significantly?
I only look at day chart.
Okay, you never look at anything lower than a day chart, huh?
As far as stock is concerned, I don't look at other time frame. But when it comes to analysis, okay, let's say, for example, let me show you a very interesting thing. Okay, let me show you a very interesting thing. What is an interesting thing? Sometimes a lot of people neglect one important thing. Okay, let's just interact a little bit. This is S&P 500 index. Let me share. You tell me, is it an uptrend or the downtrend? Up or down, based on technical knowledge, technical analysis knowledge that you know. Up or down? Okay. Philip said down, down. Most people, I believe, will say down. All right. Okay, so it's downtrend, no doubt. This one is the typical time frame that affect us the most. Okay, but if I were to switch to weekly chart, do you see something interesting? If you see something interesting, can you type yes? So yeah, I think some people see it. So again, longer time frame is for us to gauge a direction. Is there any possible big direction change in big direction movement? Now, however, some people would also like to precise their entry with hourly chart. This is up to you, because if you precise your entry with hourly chart, then you might need to log in and monitor a little bit here and there. Now, if you have that time luxury, why not? I don't see why not. If you have the luxury to precise your entry, I don't see why not. But this is just an example to share with you. Okay, sometimes weekly chart is very useful for us to determine where could be a support or where could be a resistance. Okay, just to share with you, this is a rebound from weekly 200 week average. Okay, and then right now we can see weekly chart MACD seems like one to golden cross. Okay, and just to share with you, last time, okay, when it goes below EMA 200, go up. When MACD golden cross, I don't know what happened to the market. Here, same thing. When it rebound from EMA 200 in a weekly chart and MACD golden cross. I don't know. Okay. Where else? Where else? Wait. Where else? Yeah, here. Okay. Again, nothing is perfect. Okay, so here it rebound here, go up. Okay. This one is a small retracement rebound, but doesn't really go into a rally. You can find a lot of interesting stuff when you start stepping down things in a weekly chart. This one, rebound, 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 rebound. Every rebound must happen at a line. Okay, short rebound. But if we look at correction, big correction goes to 200. Okay, boom, MACD golden cross, and then okay. So sometimes in a weekly chart is for us to see longer direction. It can be useful, but I wouldn't buy based on weekly chart. That's for sure. Okay, but it is helpful enough to let us know an even longer time frame, especially for indexes. And also certain stocks if you have enough data. Okay.
Okay.
So I think I answered one question
Hao.
already. Do you recommend using weekly chart for entry? No. Too slow.
Yeah, thank you so much, Jin Hao. I think we saw some interesting thing, okay, on the chart, but of course, just want to say that no recommendation.
Yeah, not recommendation. Things can fail. Things can fail. Okay.
Okay. Would you be able to read this company called PGF?
Okay, let's look at.
This is asked by John Xia.
I think, okay, you can see that there's a repeated pattern here. Okay, go this one, take this level and recently go up again. So again, this one is not about whether or not, okay, things will go up or what, because just share with you, everything is just probability based. So if I look at this, I wouldn't say this is a best trade, because we see that the MACD basically you have it goes to lower, but it really doesn't matter that much. The only thing is the stock go higher, but the MACD starts going lower. But sometimes I will still trade, just that I will take a smaller position. So how I go about to trade is, now this is the retracement. Okay, let's just make it a little bit make this as an example. This is a retracement. Okay, I can buy halfway when it rebound up. Okay. So somewhere around here. So probably already buy at somewhere around 1 ringgit and 8 cents. Okay, 1 ringgit and 8 cents, and this is the previous swing low. Okay, previous swing low, and it is 103. So what I can do is I put below 103 and probably even below EMF 50. Okay, if I were to buy here, below EMF 50. So yeah, if I put below EMF 50, it's 9% risk. So to me, it is okay. That's how I take trades. Okay, that's how I take trades. All right.
Are you able
This
to
is
look
just
at
an example, not a buy or sell call. This is just if I were to buy, this is how I will structure it.
how about Maybank?
Okay, Maybank. Okay, first thing, I think we should land on a common ground. Banking stocks are boring. So if you buy into Maybank, yes, you can see that previously Maybank go up, wow, from here to here, wow, a lot, seems like a lot. If you really go and measure it, only 10%. Okay, only 10%. So first thing, if you get into banking stocks, don't expect to make a lot of money. Okay, don't expect to make a lot. Okay, that's the first thing. That's why I don't really like to deal with banking stocks. Okay, so again, if you want to buy Maybank, the first thing, right now it go up. What I want to see is maybe these two lines cross. These two lines cross, and then this stock retrace and rebound from any of these support. Then I might enter here. Then you have a new reference to set your stop loss. All right.
All right. Thank you so much, Jin Hao. Do you take volume into consideration when you do trend following?
Okay. The answer is most of the time I don't really care. Okay. But there might be a situation that might raise a little bit of concern. Is that when there is, okay, when there's a situation like this, you have a long candle going down, and then you have a high volume. The volume is higher than average compared to the maybe past 20 days. You need to be careful. You need to be careful. So if I were to enter this rebound, the volume of the rebound must justify the drop. Meaning that when it rebound with volume that is at least the same or higher than it. Okay, you can also see that from here. From here, the previous retracement, the volume is comparatively, quite high, but it can still go up. So I would say volume is secondary. Price action is more important. Okay, price action is more important. So do I care about volume? The answer is yes. But is that the deal breaker? No. If the rebound is, you see this one going down, then pop, go out a bit, then pop, price action, go in. Okay. I'm still more concerned about price action.
Okay, thank you so much, Jin Hao. There was a question to ask just now when you show about the S&P 500 chart, right? Which MA was that?
Sam, across tonight's session, it was 20, 50, and 200.
Okay, 20-day, 50-day, and 200-day. Okay, the most bottom one, green color, is 200-day.
Yep.
All right. Are you able to look at Genting? That's by Gary.
Okay, Genting, I think I got something to story. Okay, first, it is not uptrend. Okay, you look at this, it doesn't look like uptrend to me. It doesn't look like uptrend to me. Okay, it's more like sideway with a pump. Now, specifically Genting, if you analyze the past behavior, okay, when the stock go up, it usually go up in a way that people pump it with huge volume. People pump it with huge volume. It is kind of like, if you get it, you get it. If you don't get it, it seems like the syndicate or the people inside don't want to let you go in. Don't want to let you make money because it will quickly go down. Okay. So when a stock has this kind of pattern, I usually avoid. But again, at first place, this is not uptrend already. Okay. If you want to ask me what is a good trend that I like, okay, I want the stock to ideally trade from the bottom left to top half. Okay. from bottom left to top half. Like, for example, something like this. Might not be the best, but something like this. Okay, bottom left to top half. Okay, top right. Okay, and I believe you know what I'm pointing. Okay, bottom left, top half. Okay, bottom left, top half. All right. Okay. Any other question?
All right, thank you so much, Jin Hao. So Farish would like to ask, what is your daily routine to study the markets? What do you check? What do you observe? And which sources do you prefer to use?
Okay, here's my routine. After the market close, I will look at the top gainer. I'll look at top gainer. Of course, I myself, I have other screeners, but you can just use whatever sources you have or stocks that are already in a watch list. You need to do one round homework. You're going to look into those stocks and see how they behave. Like, for example, this one, I look at P-Trans. Okay, maybe if you want me to enter, I'll only enter when it drops until here and then go up. So far, I wouldn't care. Okay, I wouldn't care first. Okay, so you have to go through stocks in your watch list. Be very specific with the pattern that you are comfortable to trade. Okay, be very specific with the pattern that you want to trade. And then if there is one stock that particularly you want to enter, for example, like, for example, Bonnie, again, I'm not buy or sell call, okay? Have to keep mentioning this. Okay, so for example, this one, if it rebound, for example, I want to buy at 228. So maybe it's quite near already. Then I will put an alert, set an alert in your KLSC screener, or I think nowadays there are a lot of like investment bank. They also come out with their own apps with some kind of alert or trigger function that will give you like a notification when the price hit. Okay, make use of those functions. Okay, and as I will set those alerts in the app, and then just like that. And tomorrow, okay, if my phone give me any notification, then I'll just enter, buy or sell the stock. If not, then doesn't matter. Not every day I buy or sell stocks. Just put it this way, especially this year, because the market has been really boring. Okay. The thing is, when the market recover, go up, you need to know how to capture this stock, because I think everybody would know that when the market recovers, a lot of stocks will go up. The only thing is, how are you going to capture them? Okay. When the market recover, then everything is going to be very apparent. Okay. If tonight you need to have one specific thing to take away, that is the most important one, would be trailing stop. Remember learn trailing stop. After today, learn trailing stop. Google it. What is trailing stop? And then see how it can work for you. And then you're gonna put yourself back to back in the past. Some people say history is boring, but let me just ask you, if history were to repeat, it gives you, okay, a bull run like Top Glove. Okay, if these were to repeat again, how can you capture it? Don't remember the price. It's like, oh, Top Glove go to 30, I will sell at 30. No such BS. Is you look at that situation, how can you do it better? Okay, maybe this time round, you buy here, you sell here, then you never trade again. Then you ask yourself, if the bull run were to come again, how can you improve yourself? For example, many years ago, okay, stocks like P Metal, okay, come out. And you're going to ask yourself, okay, this trend, okay, 2016, if this were to happen again, what are you going to do better? How are you going to make it a better experience and profitable bull run for you? How can you make this bull run a more profitable compared to the previous one? Okay, does that make sense? Okay, like for example, if stocks like JHM were to repeat again, okay, this type of bull run were to repeat again, how can you make better trades in such uptrend? Okay, so the key is definitely going to be trailing stop. Okay, so if that's the only thing that you learn tonight, that will be trailing stop, because like it or not, the market is going to recover at some point in the future. It might be next couple of months, it might be next year. Okay, it might not be the entire market, it might be one sector. Because Malaysia market, you seldom see like entire market go up. Okay, like year 2020, we have glove, we have packaging, we have technology, but not all the stocks go up, not all the sectors go up. Okay, but bull run, when it comes in certain sector, it comes strong. How are you going to capitalize it? So that's the thing that I think as a trader, we always need some post-mortem session for that. All right, so I think that will be all for today. Is it?
All right, thank you so much, Jin Hao, for doing this question and answer session for us.
Yeah.
And thank you so much for sharing with us your trend following strategies so that we all will learn how do we ride the big trend. All right, so thank you so much, Jin Hao.
Yeah, my pleasure.
All right, so for our next webinar, it is titled Perdagangan Menggunakan Charta Lilin. So it's candlestick trading. All right, how do we trade the stocks using candlestick patterns? So it's happening on 29th of July, this Friday, 8:30 to 10 o'clock. So you can enroll into this session, okay, using the link that I've just given you, okay. Of course, the session will be conducted in BM. So for those of you who want to learn this session in BM, please enroll and register yourself for this webinar happening on this Friday. So we would like to express our gratitude to Jin Hao, who is the Chief Master Trainer of Street Finance, to share with us trend following strategies. So hope all of you here have gained enormous value from this session. So I hope to see you all on Friday. All right. So bye, everyone.
Bye, everyone. Good night.
Yeah. Have a great night, everyone.